Thing on my mind, gotta hustle and grind. Financial literacy always on my mind. I'm stacking knowledge, no time to waste. Gotta invest smart, gotta keep up the pace. I'm reading books, learning all the tricks, studying the market, making calculated picks.
What's good, everybody? It's your boy Reckless Raiden Arrow. We are back at it again with a big update. You know, we're talking that bag talk, so we've hit a metric. We've hit two metrics, actually. The first one being we have hit our target of 2,000 shares of Misty. I did move it up, and then I kind of panic bought, and, you know, we got our cost average down a little bit. We're in the 25s. Now, we were working down from 32, which is good. We did a lot of buying. But now we're pivoting because once we hit 2,000, that's the end of my phase one for my portfolio, our primary portfolio, which is the income portfolio. And what we are doing after that, we're going to talk about here in a second. But first, let me remind you, don't forget to hit that like button. I'm not going to forget to tell you to hit that like button, so don't you forget to hit that like button. Secondly, if you've been here more than 2 times or you like the value that you're getting over here thus far, which in this little opening snippet, obviously, you know, some people, you see their video, you know, I rock with this guy. This is somebody that I want to rock out with. So if that's you, hit that subscribe button. And then also hit the bell notification and turn all the notifications on. I promise I am not a feed flooder. The other thing that we have is for the Wolfpack subscribers that are already subscribed, you guys share the video. We got to get out into the algorithm. I mean, we're seeing steady growth, though. We're seeing like one new person subscribing a day, which is awesome. We're already almost caught up with my other channel that's shadow banned that literally has not seen another sub ever since. But obviously, we're not talking bag talk over there. And, you know, I post about these videos over there, but there's no videos that are going up directly over there. I don't know what I'm going to do with that channel. It's been a while, so it might not be shadow banned. We'll try putting some different stuff up over there and see how it goes. But the important thing is that you're here and that you're part of the pack. So what we're doing with this pivot is we are shifting, because before I was prioritizing over everything else getting to 2,000 shares of Misty. Heck or high water. We even sold off some shares out of the long-term holding portfolio because we have to fix this income problem. And once the income problem is fixed, which this should be the beginning of the downhill descent of us just barreling through some debt, predominantly fixed for now. Obviously, we're still working in a medium of currency that's being debased. So that's a constant uphill battle. We're also trying to replace our W-2 income, which is also, well, actually, that's not much of an uphill battle because, I mean, it's basically a stagnant number at this point, because companies don't appreciate people. So what we're doing is every year, my goal is for this income to at minimum double. So last year we were at 13. We made about $13,000, I believe. It was like maybe $14,000, something like that, maybe 15. But right now, going into the month of July, we're already at $13,000. That's how much we've received so far this year. For the total profit for this position, and for those of you who've been tapped in with me, you already know I bought through the peak because I was dollar cost averaging. I was just like, yo, dollar cost average. Reason being, I wanted and needed the income. So as we're building up that income machine, I do not care what price I buy at. I care how many shares I have based on my average of what I'm thinking. And I'm basically basing the positions that I'm going into that I'm getting $1 a month out of the position total. So my base level for the first position is $1, which equated to 2,000 shares because I wanted each position in this portfolio to be producing around $2,000 a month on average. Now, Misty, when we started buying in, was producing way over that amount, but the IV, the implied volatility of MicroStrategy, is down. Therefore, the payments are down. The higher the IV on the stock, the better payer it's going to be. Now, if you find a stock that has high IV and is on a stair climb up, that's not a hockey stick up. That's not, it definitely goes up every day. That is, it is having volatility. It's going up, it's going down, but over the long haul, it is going up. Misty MSTR fulfilled that role. Also, it's part of the Bitcoin narrative, and I am a big Bitcoin bull. All roads lead to Rome, Rome being Bitcoin for me. And Misty's something I'm comfortable with. Even with MicroStrategy having low IV, and even with this month being the worst month ever, like, yes, I can say that this month was the worst paying month because metrically it has been. Fine with it. Because before we got paid, everybody was like, we're getting paid 76 cents. And I was like, that's a little bit concerning considering the other options that we have available. But I was like, I'm finishing up my position and I'm banking on $1. We got $1. It was like, what, 24? Something like that. Not bad. $1.23, whatever. $1.24, great. I'll take it. We're over $1. But this is the worst month. So like my assessment of the position being $1 and getting to the 2,000 shares, I've done everything I need to do. So we will not be purchasing more Misty unless it drops below $20. Anything below $20, I am scooping up more Misty. That is my buy-in metric. My cost average is at 25 for me since the position is finished. I will only buy sub 20 Misty. That's going to be my rule. If we're above 20, I'm working on the second position, and we're just going to call it leave it at that. Now, the other thing to note is that we also got a payment. I did the math wrong on how much margin I was going to have left. I thought I was going to have a few $100s in margin left. I have $18.59 left. So the next paycheck that we get, margin's cleared out because I have direct deposit that goes directly into that brokerage account. And that means we can also start on the next position. It's going to be great. And when we get our declaration, I will be able to use my margin strategy, which I call tasteful minimalist margin, to kind of get some of those pre-buys in some of my other positions and get the money moved around. And we're going to talk about, oh, geez, that's still on the screen. That's hilarious. We're going to talk about how we're breaking down the dividends moving forward. So before, like I said, we were doing a maintenance for our debt. So what I was doing was I was pulling out the minimum payments for all of my positions of debt that I have. So everything that needs to be maintained. And we were paying the bare minimum and tapping the margin and investing as much as we could to get to those 2,000 shares. And as we can see with the margin balance being down to $18.59, it worked out for us. Now we are back. Now we're gearing up to get ready to invert what we were previously doing, which was managing the debt. We're going full on attacking the debt. Now, what does that look like for us? I've said in previous videos that aired this week that we're looking at roughly 60-ish%. The reason it's 60-ish% is because we're going to have a little bit of extra, like a stagnant amount of cash coming out on top of 30% being cut off the top, not for taxes because I can pay the taxes out of the future dividends. But I am pulling 30% out to do investment maintenance. Now, we're not going to have as much going in our investment portfolios as we have had previously. What that means is, as far as this portfolio goes, since we're not tapping margin, our investment percentage is going to be down because when we were tapping margin, we were printing money. Basically, it's the closest thing to printing money that any of us have the ability to do, which is pull debt and then buy investments, which is what we're doing. But since we're going as hardcore as possible on the debt, I'm going to stave off from that. Also, I don't like using margin anyway because it puts you in a position where your shares can be called, and I don't like that. I like pulling debt from other sources and then bringing it into the market. So that way, if things go bedlam, I have a decision on when and how I want to cash things out to repay that debt should I need to. I also have the ability to maintain those debts with the dividend. Again, we got that. So this is how we're going to break it down. My investment maintenance strategy moving forward, this is Q2 forward, and we're probably going to be doing this the rest of the year or until the debt that we have acquired, which is around $29,000 now towards the end of this month. It'll probably be in the 29s around there, something like that. But it's probably going to be 29 something. But first thing August, we're swinging at it with a bat. We get that double pay from Misty. That's going to be the jump start for us just lambasting this debt. And hopefully IV goes up. Hopefully Bitcoin goes up. Hopefully MicroStrategy shoots to the moon. I'm expecting these things to happen over time. And honestly, it's better if MicroStrategy goes up slower. We just want the IV to go up fast. Now, if the IV spikes, now we can start making some money, like some bigger payments again, because over $1 is perfectly fine with me. I can do what I need to do moving forward with $2,000 and 70% ish of 60 something percent of it going towards just paying this debt off. Like that's a good chunk of money every month. And we're going to be trying not to spend money every month. So moving forward with that, we're going to, it is going to be what it is going to be. So first and foremost, we have the first 10% off the top, which is going to go into our long-term holdings. We got to get in on those SPACs at good prices. I also would like to build up. I have to rebuy into CEP because if you watch the portfolio update, we sold that position to get the last 100 shares of Misty. So I got 100 shares of CEP I got to get back. I want to get 100 shares of Anthony Popliano's SPAC that he's got going. Shout out to APOP. I didn't sell your shares. I had to sell Jack Mahler's shares. Sorry, Jack, but I'm buying back in. I was down anyway. So it's a good tax loss harvest opportunity. We got to move strategically. And, it is what it is. So we're going to be putting money regularly back into the long-term holdings, which means we're going to get back to at least at a bare minimum a monthly buy-in for our SPACs. The next 10% we're going to pull is going back into Bitcoin. We're turning the spigot back on. We've already turned the spigot back on by having a little stipend come out of the check, $20 a check, $40 a month. And the reason I'm doing that is because every little bit matters. When I started buying Bitcoin, I was buying Bitcoin at $1.50 a pop, like not the Bitcoin price, but I was using change from checks. So little amounts do matter. They do compound. 100% on $20 is $40. 100% on $40 is $80. 100% on $80 is $160, and so on and so on and so on. These numbers add up, especially if you're saving in the strongest asset ever created. So I went ahead and I was like, hey, I'm going to go ahead and run what I'm doing and start putting $20 at a time in. Well, the fun thing is now I can have 10% come in. So like if that's 10% off of $2,000, that's $200 additional a month, which puts us at $240 a month. So 100% on 240, that's 480. Like the numbers just keep going up. And so I'm never going to not be buying Bitcoin probably for the foreseeable future, because that's what I look at as my 401k, my Roth, whatever, your retirement savings. We are also on the journey to get back to get an additional 1.33 Bitcoin, because that's the minimum that you can have in Strike in the state that I live in to leverage it. Now, it's a big leverage. But once we can do that and we can start actually leveraging and putting some additional torque on our Bitcoin, this whole cycle that I've got going starts getting really interesting, because when I can pull $72,000 out of the clip, which is more than what I have in my investment portfolio right now, and I can start deploying with that to get income, pay that back. Now we're ratcheting up how much Bitcoin we can buy. And after this debt is gone, we're going to have another update for the strategy for after we're done, which I'm piecing together now to see what that's going to look like. It depends on how much income we're generating after the debt's paid off. Like, that's going to be where things get interesting, because then we're going to be torquing everything. Everything's going to be an opportunity to generate more income. Now, the last 10% rounding it out is I'm going to have a 10% reinvestment into the income portfolio, which will be buying the next position unless we are under $20. If we're under $20 in that 10% reinvestment, we'll go back into buying more Misty. I will buy more Misty under $20 all day long, provided the maths. Now, that's also, again, the math has to math. Like, we got to look at what we're doing, because I've rode down to 17. I don't foresee us doing 17 again, but at least not for a while. But, with that IV down low, MicroStrategy seems to be being suppressed somehow. I don't know. But, they're cranking the ATM. They're getting the Bitcoin average Bitcoin per share price up. They're using all of their abilities to buy Bitcoin. So I am more focused on that. Misty allows me to get income that's generated off of Bitcoin with a little bit of leverage. But we're going to be reinvesting into the portfolio. Now, this 10% is, and all these numbers are bare minimums, because after this debt is paid off, all of these numbers are going up, like just in general, because I'm not living out of that portfolio yet. So, like, once the debt's paid off, the lion's share of this is just going to be for establishing the portfolio. So it might be forced, because then the only other thing that I have is my mortgage, and which is the last part. The last part is I have $250 that is siphoned out for my mortgage. And it's actually going to be a little bit more than $250, because what I've been doing is buying 2 shares of Strike in my in-home banking portfolio. The Strike holding in there is 100% for my mortgage. Now, what I'm doing is I'm taking the money that I was putting in extra on my mortgage and setting it in Strike, because that's going to perform better than having it sit in my mortgage, because that has more advantages than my mortgage balance going down. Now, what we'll do is we'll build that position up until we are able to pay off my mortgage, and then we'll use the dividend that Strike pays to start maintaining the mortgage in and of itself. Because then we'll just have big pays quarterly. I'll go ahead and start chunking it down after we get around $20,000. Actually, you know what? That'll just be maintenance, because, and this is the reason, once we get it paid down, before we get it paid down, I'm going to be tapping that HELOC to get additional funds to ramp up the income, to then buy more Bitcoin, to then pay the house down faster. So we're going to have a little cycle going, and I'm going to have a few of our a few of the tools at my disposal, likely all the tools at my disposal. We will be cycling and torquing to get as much Bitcoin as possible, and also build up as much income as possible, because hopefully a little bit after the probably about another 12-ish months, hopefully, after this debt's paid off, 12, 14, I'd say 12, 24. I'm going to be honest, 12 to 24 months, because right now we are at 25 months. And it's looking like that's going to make sense, because it's going to allow me to get myself positioned and get some other projects done without having to touch the income portfolio. But we're going to be ratcheting up all of these numbers. These are our bare minimums. Everything's going into paying off the debt. We are laser focused on that right now. But it's important to note that the Bitcoin acquisition is back on. We are back on. We're going to be looking at that very seriously, and we'll be building up these income portfolios, specifically this one, to provide a this is going to be the nexus of my existence once if I retire early, or even if I decide to go work once I get to the state of work optional, the work money becomes the walking around money, and this income portfolio becomes the nexus. So like, we'll be doing some experiments and training Will living out of it and seeing how that works out. I think it's going to be really interesting. The numbers are moving in the right direction, even with the lower payouts for Misty. And now we're going to be starting that secondary position while keeping an eye on Misty, because if we do get dips below 20, I will be buying. And that's basically what we've got for this episode. I hope you guys tapped in, got a lot of value out of it. Hopefully it's giving you some ideas for some stuff that you can do with your portfolios. Obviously, I am also functioning in a taxable account. I would rather pay taxes and be able to retire at my leisure, or stop working at my leisure, or take time off at my leisure, as opposed to being forced to continue working when I don't want to, because all my money is behind things that are going to be heavily penalized should I try to use them to not go to work, which actually means that you don't get to get out of working, because the penalties put you back in a space to where it's like, okay, well, like now you're not indefinitely retired because the numbers don't make sense. This, for me, the numbers will make sense. We've got 25 months. We're on that countdown where we will be work optional / retired. And yeah, so I am functioning out of a taxable account. I just paid the taxes out of the dividends. You get a little ding on your dividends for a couple of months, 1 month, 2 months. It depends. I always pay back slow because they send me my money slow when they pay me. So I'm like, I'm going to pay you as slow as humanly possible within reason. And so that way, you're not even out for a month. It's like you're cutting back a little bit for a few months. And yeah, so obviously not financial advice, just me documenting the journey. Hope you guys got something out of this. Definitely hit that like if you haven't yet. Now you're at a point to where you can make a educated decision, because basically this is my style of presentation. These are the types of videos that I do. Everything over here is bag talk. We're talking about the stuff that I'm doing with my money. It's not financial advice, just me letting you guys know what's going on and reporting back the results, so that hopefully if I do find a landmine or I make a bad decision, we sit here and talk about it together. And that way you don't have to make it with your money, because, it's always better to watch somebody else lose their money than to lose your money and be like, hey, I knew that guy was cuckoo for Cocoa Puffs. But you're hit that subscribe button. You're more than welcome to join the Wolf Pack. We're not trying to get rich by ourselves over here. And also hit the bell notification. And for my people in the Wolf Pack, thank you for tapping in as always. I'm sure I'll get a few phone calls around lunchtime. And I will also probably get some DMs on Instagram and probably a few Facebook messages. And I'm here for it. I love talking about money. So I'll be hearing from you guys soon. But for those of you who don't want to reach out direct, tap in with me down in the comments, because I do reply to all the comments. It's me replying to the comments. I'm the only guy over here. There aren't enough subs for me. I don't have a team. It's just me. Honestly, when there are enough subs, because this is kind of like a hobby / way for me to kind of brain dump before I go to bed, there probably won't be a team for quite some time, and I will answer comments until I can't. And then when I can't answer every comment, I'm still going to get in there and answer like 50 to 100, because I'll sit here for like an hour at sometimes when there's a bunch of comments, and I'll just go through them all and answer the ones that I can. I will also just so you guys know, with the bots and these spam conversations about these random people that exist, but it's a corny way to strum up traffic for your channels off of micro influencer. Actually, I'm not even a micro influencer. I'm a minute influencer. But thanks for taking the time to do that over here. Those accounts only get to be over here once, because after I report your comment, you're hidden from my channel forever and you're forever banned. Just so you know. Till this is the weekly one. This is Back Talk episode. Till next week, people. I'll see you. I'll be tapping back in on Thursday. Looking forward to hearing from everybody. Till next time, we're gonna keep on trucking. It's your boy Reckless Ray De Niro, and I'm out.
Money on my mind, yeah. Focus, got no time for games, nah. I don't play, man, I'm all about that financial literacy. Investing in my future, building generational wealth. Dollar bills, they be calling my name, but I ain't chasing fame, I'm chasing change. Learn the game, now I'm playing it smart. Putting my money to work, it's an art. I'm stacking paper, building my own empire. No more living check to check, I'm getting higher. Investing in stocks, real estate, and more. Gotta secure the bag, that's what I came for.